Hello and welcome to Stoxies. Today we will talk about a company that may not be heard of as often as others in the technology sector, but it plays a very important role in the way the modern world works. We live in an era where technology is everywhere around us. From the mobile phone we hold in our hands to the huge systems that support communications, businesses, and the global economy. But behind the companies we all know, there are also some quiet players working in the background. One of these companies is Broadcom. It does not often attract the spotlight, but it is at the core of modern technology and has built an impressive career over the years. In today's video, we will see who Broadcom really is, how it evolved, how its stock moved, what its main advantages are, but also the risks that every investor should be aware of. Stay with us until the end to draw your own conclusions about whether or not investing in Broadcom is worth it. Let's get started. Broadcom is one of the largest technology companies in the world. It operates in the fields of semiconductors, networks, and digital infrastructure. Its products and solutions are used in data centers, telecommunications networks, large enterprises, and critical technology applications. Although it is not particularly well known to the general public, its presence is almost everywhere in the modern digital economy. The company's history begins in 1961. Over the decades, Broadcom has changed form, ownership, and strategy, evolving through acquisitions and mergers. The most defining moment was the integration of AVGO with Broadcom, which led to the creation of today's Broadcom Inc. From that point on, the company acquired the size and momentum of a global technology giant. Broadcom first went public in the 1990s, and since then its stock price has reflected the company's own evolution and the changes in the technology market. In the early days of public trading, the share price was relatively low, around $20 to $30, while in some sessions it had reached more than $50 to $60. As the internet and communications revolution gained momentum in the early 2000s, the stock saw significant increases, following the general upward trend of technology stocks. In the following years, and especially after the creation of what is now Broadcom, the stock entered a new phase of strong growth. At the beginning of the previous decade, before 2015, the share price was around $5 to $10. From that base began one of the most impressive rises in the technology sector. In 2016 and 2017, the stock had already reached higher double-digit levels, approaching $20. At the end of 2019, its price was above $24 to $27, recording an increase of more than 300% compared to 2015 levels. In 2020 and 2021, the upward trend continued, with the stock closing 2021 near $60 to $62. 2022 was a difficult year for the markets, with a sharp correction, but from those lows a dynamic recovery began that led the stock to new historical highs in the following years, exceeding $400. Over a 5-year period, the total increase in the stock exceeds 500%. Not counting dividends. A course that clearly shows that this is a stock with intense volatility, but also very strong long-term dynamics. This growth was based on steady revenue growth, high profitability, and strong cash flow. Broadcom's management is renowned for its discipline, strict cost control, and strategic selection of sectors where it can have a leading position and high profit margins. At the same time, the company follows a stable dividend policy, rewarding its shareholders over time. Broadcom has a number of strong positives that make it one of the most interesting companies in the technology space today. These figures are not just numbers on a financial report. They represent real advantages that help the company grow, maintain its profitability, and build investor confidence. One of Broadcom's key positives is its consistent revenue and profit growth. The company's revenues are high and have been growing steadily year after year, showing that demand for its products and services remains strong. At the same time, the company manages to convert a large portion of this revenue into actual net profit, which strengthens its financial health. Broadcom is also distinguished by its high profit margins. High margins show that the company is not limited to only having high revenues, but also operating efficiently, with a remarkable ability to control its expenses. This gives Broadcom a significant competitive advantage over other companies in the industry. Another important positive is its strong cash flow generation. Broadcom generates large amounts of cash from its operations. This cash flow allows it to fund its operations, invest in growth, reduce debt, and return value to shareholders through dividends. Broadcom's dividend policy is also a strong point of strength. The company has a history of stable and growing dividends, which shows confidence in its future cash flows and the stability of its earnings. This makes the stock attractive not only to growth investors, but also to investors looking for income. Broadcom has built a strong and diversified business model. It does not rely on a single source of revenue, but covers multiple product and service categories, from semiconductors and digital infrastructure to software and enterprise solutions. This diversification reduces dependence on a single sector and provides greater stability overall. The company also has an impressive technology position in critical areas such as networking systems, high-performance processors, and data center solutions. Through strategic investments and research, Broadcom remains at the forefront of technological development, which makes it a reliable partner for large companies and organizations around the world. Broadcom has a strong earnings per share, indicating that the profits attributable to each share are high and growing steadily. This indicator is one of the main reasons why analysts positively evaluate the stock and see the potential for further growth. Another important positive element is the ability of management to make decisions with a long-term vision. Broadcom does not focus on short-term trends, but plans for years and decades ahead, which has been proven by the strategic moves and acquisitions that have strengthened its position in the market. Finally, Broadcom benefits from long-term technology trends, such as the increase in demand for digital infrastructure, high-performance computing systems, and connectivity. These trends are not temporary, but are a structural part of the global economy, and are expected to support Broadcom's growth in the future. No matter how strong a company is, no investment is without risk. Broadcom is a prime example of a quality company with excellent financials, but that doesn't mean its stock can't be negatively affected by various factors. Investors should be aware of these risks before making any decisions. One of the main risks is the stock's high valuation. Broadcom is trading at levels that embody high expectations for the future. This means that the market expects continued revenue and profit growth. If for any reason the financial results do not meet these expectations, the stock may come under intense pressure, even if the company remains profitable. A second major risk is its intense volatility. The stock's performance in recent years has shown large fluctuations, with sharp falls and strong recoveries. This means that investors must have psychological resilience and a long-term perspective. Those who cannot withstand the strong fluctuations may be forced to sell at the wrong time. Another important risk factor is competition in the technology sector. Broadcom operates in a space where there are many large and powerful companies. Competition is constant and requires large investments in research and development. If the company fails to maintain its technological superiority, it may lose market share, and its profit margins may be squeezed. Another risk is related to concentrating revenue with large customers. Broadcom works with very large companies, which increases revenue but also creates dependency. If a major customer reduces its orders or changes suppliers, this could directly affect the company's financial results. The global economic cycle is also a risk factor. During periods of recession or economic uncertainty, many companies limit their investments in new infrastructure and technology equipment. This can lead to a temporary slowdown in Broadcom's growth, even if the company remains strong in the long term. The company's debt also plays a significant role. Broadcom has used debt to finance acquisitions and expansion. Although it has managed its debt effectively to date, rising interest rates or a decline in cash flow could increase pressure on its financial results and affect the stock. A less obvious but real risk is the integration of acquisitions. Broadcom has grown strongly through acquisitions, which offers growth but also carries risk. If an acquisition does not perform as expected, or if there are difficulties in operational integration, earnings could be negatively affected. Geopolitical risk should not be ignored. The technology industry is strongly affected by trade tensions, regulations, and restrictions between countries. Changes in international politics or new restrictions on technology exports could affect Broadcom's business globally. In addition, there is the risk associated with technological change. Technology is evolving at a very rapid pace. If new solutions or alternative technologies emerge that reduce demand for Broadcom's products, the company will need to adapt quickly to avoid losing its position. Finally, an important factor is the general market sentiment. Even the best companies can see their stock fall when the markets are going through a fear phase or correction. During such periods, investors often sell indiscriminately, affecting even quality stocks like Broadcom. In conclusion, Broadcom is a strong and quality company, but investing in its stock requires an understanding of the risks. High valuation, volatility, competition, and economic conditions are factors that must be taken seriously. A properly informed investor does not ignore risks, but evaluates them and integrates them into his strategy. Analyst estimates are valuable because they show how market experts see the stock price development in the near future. Broadcom stock is currently heavily covered by investment banks and financial institutions, with the majority giving a positive rating and an upward outlook. If we look at the average price target for the next 12 months, analysts place it at around $420 to $462 per share. This means that, from the current price levels of around $330 to $350, there is room for an upside of around 25 to 40% compared to the current price, according to the analyst consensus. As is often the case, there is variation among analysts. In many cases, the lowest price target we see in the estimates is around $300 to $390. These more conservative forecasts typically come from analysts who want to incorporate a greater degree of risk or consider more moderate assumptions about the company's operating performance. On the other hand, more optimistic estimates give upper-end targets that reach as high as $475 to $510, and sometimes even higher. These forecasts are based on continued growth in demand for Broadcom's products, especially for specialized processors and technologies related to artificial intelligence, data centers, and digital infrastructure. For example, leading analysts from banks such as UBS, Citi, and Truist have set price targets as high as $470 to $500 per share, suggesting plenty of upside if Broadcom continues to outperform and expand its profitability. Overall, analysts' outlook for Broadcom is indeed positive. The median target suggests a potential upside from current price levels, with lower target levels near $300 to $390 and upper target levels above $470 to $510. This creates a range of estimates that reflect different growth scenarios, from more conservative to more optimistic. The majority of analysts, however, summarize their views under a strong buy or buy. Strong buy rating, indicating that Broadcom is seen by many as a stock with a positive outlook for the next 12 months, especially if it continues to grow in cutting-edge areas such as networks, infrastructure software, and artificial intelligence. Broadcom is not a company that relies on noise, fads, or temporary market trends. It is a company that builds value slowly and steadily, with a clear strategy, discipline, and long-term vision. It does not promise easy profits, but it demonstrates in practice what can be achieved when technology is combined with proper management and strong financial foundations. The course of its stock over the years clearly shows that great returns do not come from the excitement of the moment, but from patience and consistency. The sharp fluctuations, the highs and lows, have tested investors many times. But those who manage to see the big picture and focus on the fundamentals have seen this strategy rewarded. Broadcom is a typical example of a company that does not try to impress, but to dominate where it really matters, in the infrastructure of the modern economy, in areas that support the entire digital world and will continue to play a decisive role in the coming years. Of course, no investment is without risk. High expectations, competition, and general economic conditions are always factors that must be taken seriously. The important thing, however, is to know what we have in front of us and not rely on rumors or superficial impressions. If you liked this analysis and want more videos about stocks, companies, and the economy in simple and understandable words, don't forget to like the video, subscribe to the channel, and leave a comment with your opinion on whether investing in Broadcom is worth it now. See you in the next video.